Welcome back to my YouTube channel. In today's video, I'm going to break down market structure for you. This video is going to be divided into two parts. So we're going to have part one and part two. So do well to watch the video to the very end so you can have a better understanding about market structure. So let's start. Structure. What exactly is structure? Structure helps you in understanding the framework in the market. That is, it helps you in recognizing the participants in the market, knowing fully well that the marketplace comprises of two players. It comprises of two players, which are buyers, and what? Sellers. These are the players in the market. That is, you are either a buyer in the market or you are a seller in the market. If you are a buyer in the market, that means that you want market to project to the upside. Then if you're a seller in the market, it means you want market to project to the downside. Now, knowing fully well that these are the players in the market, we now need to understand what makes this to be buyers players and what makes this to be sellers players. This now leads us to what we call the psychology behind buyers and what? Sellers. The psychology behind what? Buyers and sellers. Now, it's worthy for you to note that there is always a reason to why something is called what it is. For instance, you are called a medical doctor, maybe because you have gone through medical school. You've spent like maybe 5 to 6 years studying medicine. All right, you've gone through the process before you become a certified doctor, right? So it means that there are principles, there are things that makes you to be a qualified doctor or maybe a surgeon. Now, bring it out to the market. Everything in the market has a psychology. The human components also have a psychology. You are a woman because you have some certain things that are in your body that makes you a woman, and you are also a man because you have some certain things in your body that makes you a man. All right, so those are the psychology behind you becoming, or those are the psychology behind you being a man and also being a woman. And since we are dealing with the forex market or we are dealing with trading, then it means that we now need to understand the psychology behind buyers and what? Sellers. So we'll start with buyers. For buyers, it is expected that price is supposed to break structure to the upside. That is, we recognize buyers because they form series of higher highs and higher lows. 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 HH is linked to what? Higher high. HL is linked to what? Higher lows. All right, so this is the component of what? A bullish market structure. Then for a bearish market structure, it is breaking structures to the downside. And what makes this a bearish structure? Because it is creating a series of lower highs and lower lows. Lower highs and lower lows. Lower highs and what? Lower lows. So this is a bearish structure projecting to the downside, a bullish structure projecting to the upside. Now, let's take a step further. You agree with me that in a real market condition, a real marketplace, price doesn't give us this very simple price action. That is, we don't just get price creating higher highs, higher lows like this, but rather we see markets creating something like this. You agree with me? I'm very sure you guys are not beginners here. I don't have beginners in my midst, so you understand what I mean by this. Now, this is called an advanced structure, and that is how market presents itself to us. We usually have advanced structure. Now, with the formation of this advanced structure, we can use it to identify true highs, and we can also use it to identify true lows in the market. Now, why do we need to identify true highs and true lows in the market? One, so that we can know when we have a true break of structure. All right, when we have a true break of structure, then It can also help us in understanding liquidity. Now, this liquidity is when we get to the second segment of your mentorship, which is HRC. You will now get to understand why it is necessary or why it is important that you note true lows and true highs in the market. Now, let's now see how we can identify true highs and true lows in the market. Now, let's say we have something like this. Okay, now this is a complex market structure. What trend is this? An uptrend. Price is projecting to the upside. So it means that the participants here are the buyers. Okay, now this is the low that led to this high. Higher low, higher high, higher low. At a particular point in time, this was higher high. Please pay attention. At a particular point in time, this was higher low, and this is also higher high. But now, because this low right here is lower than this previous low, it means that this low will no longer become what? The true higher low. Why? Because we now have an equivalent low that is lower than this. So in that case, this is what? Higher low and higher high. Meaning this high here, is not the true higher high. But now we now have another low, lower than 1 and lower than 2. It means these two guys are not the true higher low. Meaning that whatever happened from this area to this area here, that is from this shaded area here to this shaded area here, is one move. Is what? One move. Meaning this is higher low, higher high, higher low, higher high, higher low, and what? Higher high. Now you see I didn't pick this as a higher low. Why? Because this low right here is lower than this. So this is the formation of true lows and true highs in the what? In the market. And this is an example of a complex or advanced market structure. So the first one I drew, that way I said price was greater higher. This one is just a normal simple market structure. Okay, which you know that price won't give you this type of price action, although it does, but in a very it happens less of the time. So that's it. So now let's now dive further into structure. Let's now talk about the components of structure. Please, when you are watching this video, I'll create another Telegram group for you guys. I'll create another Telegram group for you guys so that you can have access to the videos. Okay, so you can have access to the videos and you can always study and educate yourself. Okay, so let's now talk about elements of structure. Elements of structure. Elements of structure. Now we have what we call major structure range or major liquidity. So this is the first one, major liquidity. And the second one is external liquidity. So what is major liquidity? If price is creating higher highs and higher lows like this is a bullish trend. The highs that are being broken, they are called the what? External liquidity. In a bullish trend, the highs that are being broken, they are called the external liquidity. I represent external liquidity with EL, and I represent major liquidity with ML. So the highs that are being broken, they are called the external liquidity. Then the lows that we don't expect market to read, they are called the major liquidity. Then this is for a bullish scenario. For a bearish scenario, this price breaking structure to the downside, the lows that have been broken are called the external liquidities. The highs that have been respected are called the major liquidities. This is the first part of elements of structure. Now let's go more deeper. So the next one is called the major structure range and the minor structure range. the major structure range and minor structure range. So let me erase this. We have major structure range, then we have minor structure range. Now, what are major structure range? If I'm still using this as a case study, a bullish trend, the highs is in direction. This shaded area is in direction to the trend, right? Which some people will call the impulsive move. The what? The impulsive move. This impulsive move is called the major structure range. Why this pullback area is called the minor structure range. This is called major structure range. This pullback is called minor structure range. So this is a second example. Major structure range and the minor structure range. Now, let's now take a step further into internal structures and range structures. The internal structure and the range structure. Now, it's worthy for you to note, what is a major structure range, if I may ask? A major structure range is simply the distance between 2 points, point A or what? Point B. A major structure range is the distance between 2 points. So if I call this low and I call this high, the distance from here all the way to this area is called a structure range. It is called a structure range. What is a structure range? Distance between 2 points. So I can label this as point A and I can label this as point B. Market is fractal, can be broken down into several components. Okay, so just take note of that. So let's now go into what we have: major structure range and minor structure range. So I just needed to explain this first before I go into that. Major structure range. Okay, let's start with internal structure and range structure. Internal and range structure. Internal and range structure. Internal and range structure. Now, if I have something like this, if this is my external liquidity high, this is my external high right here. These structures were formed before price broke this external high. It means that this is an internal range. Why? Because these were the structures formed before the break of the external liquidity high. So that means that internal structures are simply the structures that are being formed before the break of your external high. Internal structures are structures that are being formed before the break of your external high. Then what are range structures? What are range structures? Range structure is the opposite of internal structures. They are simply the structures that are formed after the break of your external high. So all these ones were formed after. These were formed before. So these ones, they are called the range structure. Now, you can replace this word range structure with external structure. So I can choose to say internal range and external range. What you need to focus, your major focus right now should be the psychology behind that topic. That is the best way to study. When you are studying anything in life, okay, you focus on the psychology of that thing. Okay, that should be your major focus. So, for instance, if I want to learn anything right now, it won't take me more than 1 minute. Why? Because I'm only interested in, okay, if you tell me that 1 plus 1 is 2, I'm interested in why is 1 plus 1 equals to 2. If I can get why 1 plus 1 is equals to 2, that is all I need to know. And the moment I was able to discover that fact, everything became very easy for me to learn. If I want to learn anything, any aspect of life, anything, any skill set, I'm interested in the psychology behind that topic. Okay, so if you want to learn something faster, smarter, and you want to be better at what you do, focus in the psychology of that particular topic. Then you are what? You are good to go. So this is an example of the external structure, and this is an example of the what internal structure. Now it's worthy for you to note that price uses range structures till it gets to the higher time frame demand or supply level that is capable of causing a reversal or a pullback. I repeat, price uses range structures till it gets to the higher time frame demand or supply level that is capable of causing a reversal or a pullback. Meaning, until price gets to that defined target, let's say this is the supply where price is heading to. Until price gets to this supply, price will keep using external structures till target is met. And it's also worthy for you to know that all buy targets must be met before any sell movement can occur. Buyers have to complete their movement before sellers comes in. As we progress with the classes, as we progress with the mentorship, you will tend to understand things much better. So I will urge you to open your ears. I will urge you to pay attention to details. I will urge you to ask intelligent and smart questions. And I will urge you to study, because this is not your usual classes or maybe the usual videos you see out there. This is much in depth. Okay, this is much more like it's deep. It's not your usual methodology to the market. This is much deeper. So it requires your concentration, it requires your time, and it requires your patience. All right. You need to understand that trading takes time, mastery takes time. So try not to rush the process, but rather enjoy the process. And I'm sure you'll be good in the long run. Now, let's now show some practical examples based on everything we have discussed today. So I want to make reference to this structure range. This structure range low and high. Remember what I said. A structure range is a distance between 2 points. So I want to label this as point A and I want to label this as point B. Now, this is the range I'm showing you right now. That simply means that everything I want to show you is within this range. So I have no business with whatever is happening here, and I have no business with whatever that is happening here. My major focus is just this range from A to B. Now, from A to B, what can you observe? You can see that the market is projecting to the upside. So you already know that based on structure, this is buyers in control. When we get to HRC, you tend to understand the beauty of HRC, and you tend to understand that a bullish movement could be sponsored by sellers, and a bearish movement could be sponsored by buyers. But that is much deeper. That is not for this class. But I'm just preparing you for the journey ahead. So I'll urge you to lock in real hard, at least for the next 3 months. Lock in real hard, and I'm sure you really appreciate these classes that you are having right now. Okay, so let's continue. From A to B, price projecting to the upside. Now, let us now prove that this is a bullish trend. So for us to prove that this is a bullish trend, we need to mark the structural highs and structural lows. So I'm going to do that now. So this is higher high, higher low, higher high, higher low, higher high. Is this higher low? No, this is not the true higher low. Why? Because this low here is lower than this. So it means that this is the true higher high and not this high. This high is an internal structure, an internal range. All right. So this is the true higher low and higher high. So I just successfully marked out the what? The structural lows and high from this structure point A to this structure point B. I hope this is very interesting. I hope you are really paying much attention to this. Trust me, it's very simple, very easy to understand. You just need to lock in real hard. You need to follow my instructions and everything will become very easy for you. Trading is not too difficult. You can really make it simple for yourself, but it's dependent on what you know and how you are able to put it into practice. All right, what you know and how you can put it into practice. Now, this is an example of a bullish trend, right? Now, since we know this is a bullish trend, let's now mark the major structure ranges and the minor structure range. So this shaded area is the major structure range. As you can see, it is the range that is in direction to the already established trend in the market. All right, the red area is the major structure range, while the unshaded parts, which is the black area, is the minor structure range. Okay, is the minor structure range. So what I'm trying to say is, just to label it, this is the major structure range, MSR. This is the minor structure range, MNR. Major, MSR, minor, MNR. Major, MSR, minor, MNR. You can see the way I'm teaching you guys like babies right now, yeah? It's as easy as that. Okay, so this is the major structure range, minor structure range, major, minor, and what's major. So that's for major structure range and the minor structure range. Now let me now show you guys example of the internal structure and range structure. So let me pick a different structure range now. Okay, let me use this structure range. I want to make use of this structure range. So let me clear my charts. So let's say I'm making use of this structure range high and this structure range low. Where is our external high? This is the break of our external high. Sorry, let me use this. So this is the break of our external high, right? This is the break of what? Our external high. So let me put a line there. This is the external high. Okay, the external high. Now, every structure that you are seeing here, that is, let me bring up my rectangular tool now. All these structures that were formed just before price broke the external high, they are simply called the internal structure. They are simply called the internal structure. Why did I call them the internal structure? Simply because they were formed before the break of the external high. Then every other structure you are seeing here, they are called the what? The range structure. They are called the range structure. So this is just an example of the internal structure and the range structure. All right, then the last part I'm going to make reference to, or maybe I'll discuss about it in the next video, will be I'll discuss about the types of breakup structure that we have in the market. So that will be in the next class before we go into the next course outline. All right, so I hope you guys found it very educative. So I'm going to stop the recording now. Then I will give you guys room to ask questions and then we proceed from there. So I'm going to all right, guys. So I'm very much convinced that you guys have learned a lot from today's class that has to do with the basic understanding of structure. So this is the introduction part of structure. I'll call it the part 1 of structure. So I'm very sure now you understand what market structure is all about, and also you understand the component of market structure. So if you have questions, do well to drop it in the comment section. I'm going to reply to all your questions, and don't forget to turn on your notification so when I release the next video you are also going to be notified. So
See you in the next video. Don't forget to subscribe to the YouTube channel. Bye guys.